Hello, I'm Don McClintock, President of the Vancouver Island Real Estate Board, and this is your March 2018 Market Update. The British Columbia Real Estate Association reports that housing sales in most BC jurisdictions are down compared to last year. In the VIREB area, sales of single-family homes and apartments in March dipped from 2017, down 17% and 23% respectively. Townhouse sales were static, with 61 units selling last month and 61 in March 2017. We attribute our market's weaker sales to a combination of stricter mortgage qualification rules, consumer uncertainty surrounding new provincial taxes, and higher interest rates. Yet, despite the decline in consumer demand, the supply of homes for sale remains low in most BC regions. BCREA reports that total active listings on the market are essentially unchanged from March 2017 and are at or near a 12-year low across the province. As a result, home prices are expected to continue on an upward trajectory. In the VIREB area, there were only 979 single-family homes for sale last month, compared to 812 in February and 1,023 1 year ago. The supply of apartments dropped by 12%, but townhouse inventory did rise by 30%. However, any modest inventory increases are having little or no impact on easing demand or stemming price increases. Multiple offers remain the norm, particularly on well-priced properties, and homes in the $300,000 to $500,000 range are flying off the shelf. The upward price trajectory referred to earlier is certainly playing out in the VIREB area. The benchmark price of a single-family home in March reached $490,000, up 19% from 2017. Apartments and townhouses also saw higher benchmark prices board-wide in March, reaching $298,000 and $386,000 respectively. Percentage-wise, those are 25% and 24% increases from 2017. So, will anything temper VIREB's housing market? Well, our national and provincial real estate associations have been anticipating economic headwinds to hit home sales in 2018. Guideline B20, also known as the mortgage stress test, has had the predictable effect of curbing consumer housing demand. You simply cannot pull as much as 20% of the purchasing power away from conventional mortgage borrowers and not create a downturn. New provincial taxes proposed by the BC government are another risk factor. Of particular concern is the speculation tax, set to take effect this fall. It will apply to urban areas and target British Columbians who own a second home valued at over $400,000, out-of-province homeowners, and non-Canadians and satellite families. On Vancouver Island, Nanaimo, Lanceville, and the Capital Region will be subject to the tax. We believe that the speculation tax is a well-meaning attempt to make housing more affordable. However, we feel that the BC government is focused on stifling demand instead of increasing supply. That's working the wrong side of the housing equation. A better solution would be to add more inventory, which includes streamlining the approval process for developers and providing investment incentives. Further, the proposed tax appears to be misnamed, as speculation is widely understood to be buying and selling real estate within a relatively short period. What has been proposed captures properties that have been owned for many years, in some cases decades, for personal use. Although the government has responded to negative feedback on the tax and announced several exemptions, we feel the measure was rushed through without considering its potential negative impact. We'd like to see the government undertake a formal public consultation on the speculation tax to ensure it will help rather than hinder the housing market. When it's time to buy or sell, connecting with an experienced local realtor is particularly crucial in a competitive real estate market. Realtors have specialized knowledge of their communities, so I encourage you to check out our website and contact a local realtor for information on a specific market on Vancouver Island. That's it for now. I'm Don McClintock, and this has been your March 2018 Market Update. I'll see you next month.